U.S. tax authorities were duped into sending $13.8 million to fraudsters who had filed false refund claims to the tune of $210 million, according to a government application for the forfeiture of a property in California obtained by Forbes. Allegedly perpetrated between 2016 and 2020, it could be one of the biggest tax refund frauds ever seen in the country. The IRS only detailed one of the alleged schemer's activities. Forbes is not naming him as he is yet to be charged, who filed false returns through a trust he ran and claimed to have received significant interest income from a number of major banks as well as electric car maker Tesla and payments giant PayPal, according to the forfeiture application. Interest income is the amount due from a company to an investor or lender for taking their money. The defendant was named in the court filing as a principal orchestrator of the fraud, informed the IRS that those companies had paid that income onto the IRS, but the tax authority said the claims were entirely fictional, according to the government. Using those funds, the accused bought a $1.8 million property in Malibu, California, which was the subject of the forfeiture application, the IRS wrote. The agency claimed that in one of his form submissions to the IRS, he attached a purported letter and confirmation of postage, signed by the suspect, addressed to the chief executive officer of the Office of PayPal, SIC, asking that the company file its own form regarding its debt and related tax issues. But the IRS checked his claims against its own records for filings from Tesla, PayPal and the banks, finding there was no interest income due, according to the filing. No charges have yet been filed against the suspect. He had not responded to requests for comment at the time of publication. Neither the IRS nor the Justice Department had responded to requests for comment. The crime, if the IRS claims are accurate, would be huge compared to others, especially the nearly $14 million the accused were able to retrieve from the government. A Treasury report showed that for the 2020 tax year, the IRS discovered 30,038 fraudulent refund returns, totaling $135 million in refunds. But the agency managed to prevent $133 million actually being refunded, meaning only $2 million was given back. As of February this year, for the 2021 tax processing year, $16 million of fraudulent refunds had been identified, with $3.5 million being returned to the filer. According to the IRS annual report for 2020, the department launched a total of 70 investigations into questionable refunds last year. That was out of 1,600 investigations and came in the same year that the IRS identified $2.3 billion in tax fraud schemes. This story is part of the Wire IRL feature in my newsletter, The Wiretap. Out every Monday, it's a mix of strange true crime and real-world surveillance, with all the relevant search warrants and court documents for you to pore over.